When you price commodities, which are things like oil, wheat, copper, food, energy, if you measure that stuff in dollars, the price of it goes up forever. Right? That blue line on this chart has been going up since 1792. So we're like, yep, life's just getting more expensive, right? But it's also very misleading because when you measure those exact same things in a different currency, you get a completely different understanding of the story. If you price it all in gold, for example, they've actually been getting cheaper at 0.8% per year compounded for over 200 years. It's the same oil, the same wheat, same copper. It's actually getting cheaper every single year in what's called real terms, but only if you're measuring it using the right thing. What that means is inflation is not really about things getting more expensive. It's about the thing we use to measure it with getting smaller. In this case, the dollar is getting weaker, and it has been getting weaker our entire lives. Right? Every war, every recession, every new Fed chairman, our entire history had a dollar that bought less and less of the real world. Now, that system, the dollar slowly losing value while everything goes up, only works under one assumption. The assumption is more. More workers, more borrowers, more taxpayers, more consumers. Every generation slightly bigger than the last, making slightly more, spending slightly more, borrowing a little more. The whole machine is designed to run on human beings taking part of the economy, the way our cars run on gasoline. You just keep adding more people to the engine and the system keeps going. And for 230 years, that was the assumption, right? That was true. There were always more people in the system than leaving it, which is also why this blue line kept going up, which is why inflation was always manageable, because the system could always grow its way out of the problem by adding more humans. But enter AI. It is the first technology in history that grows the economy without growing the need for human beings.
You know, in terms of the jobs, this is going to take some period of time. But yes, although it hasn't been seen in large numbers, over the next several years, there will be some impact on the job market.
Which means the system we created breaks because the debt cannot be inflated away. There will be less people paying taxes. There will be less people borrowing money. And this measuring stick, the dollar, will have nothing left to measure itself against. That is the paradox at the center of everything happening right now. And what I also thought was interesting is that for the first time in modern history, central banks just moved gold above US Treasury bonds as their number one reserve asset. Except gold is not at an all-time high anymore, but the stock market is. So at the heart of this contradiction is that either AI is so transformative it's enough to justify the trillions of dollars being spent on it, in which case the jobs disappear and the tax base that funds this whole system collapses, or AI is not that transformative, in which case the valuations of these companies are a fantasy and the market corrects anyway. Right? There's no version of reality where both things are true at the same time. The debt system needs what AI destroys. And right now, our retirement account is being used to fund this game.